Hello guys, good evening. I hope you all are doing well. I hope you spent your weekend very well. And I want to drop this analysis before the market opens for this week. We are currently at the third week of July. Yeah. So let's kick off. So I'll give a revision or summary of the 3 videos I dropped last week. I dropped about DXY, I talked about Euro, and I talked about the NASDAQ. Alright, so the DXY and the Euro are two opposite markets, right? And let's start off with DXY because that was the first video I dropped. And while doing DXY, I will also give a reference to the Euro, right? Euro USD. Alright, so the first thing I talked about the dollar index is that we swept an external low right here where we have liquidity pool, that is a sell stop. So immediately we swept that low, we start to range below that low, so we are hunting liquidity right here. And I talked about it being an accumulation phase, right? So there is that was the reason why I marked out all this stuff right here, right? So this is an internal range high, and this is the external range high, then this is the external range low which was swept, then this is the new range low. I also talk about price being drawn to this favorable gap, so when it gets to that inefficiency, that is when we'll be paying attention to if it's gonna sell from there, or we balance that inefficiency and then trade out of it and be drawn to our external high. But now our main focus is right here, which is this accumulation phase that I made mention of. And we already know where it wants to be drawn to, which is this buy stop on this high. So last week I also did make mention last week during the Euro analysis that we might close on a ranging market. I was actually expecting this to sell on Euro and buy on DXY, but I also say it's a very risky trade because it did not give us a structure. Like, it didn't give us a bearish structure on Euro, neither did it give us a bullish structure on DXY, right? So I made mention that it was ranging, we were on a range, so it's risky trading a ranging market. All right, so this, and also on the DXY video I made mention that we swept this buy stop, right? And I was like, what is responsible to take this high? We'll be looking for where an impulse occur and where we have an inefficiency, and that is this old block right here. Alright, so whatever happened right here on the lower time frame does not tells me that we are going bearish on the DXY, right? It's a pullback to what is responsible to take this high right here. And also we do know that we have a closed liquidity, like a liquidity that is closer, that it's obvious that market wants to be drawn to that area, which is this high right here where we have our buy stop, right? So alright, that's why we have a buy stop. So I will be putting an icon right here to show price needs to be drawn to that high, but it needs a catalyst, it needs something that it needs to react from to be drawn to that high, which is this area of demand or a bullish order block that lab right here, because you can actually see we have a swing high, swing low, a high, then we're expecting a low to be formed and then be drawn to this liquidity and then be drawn to this buy stop and trade into this inefficiency right here. So from next month, being the month of August, we'll be paying attention to how DXY is going to trade. So for now, we'll be having our interest right here for price to trade back into it and then buy from there. So throughout last week, we can actually see the trading from last week. There was nothing serious, like it's not a serious trade right there, right? You can actually see that last week we were ranging right there. So looking for a trade and expecting this to deliver for like days, which is swing trading, is kind of like causing an emotional damage. So I made mention of this during the Euro USD analysis. So yeah, so right now if you also look at the daily time frame, you will see that right here this is what was formed and the impulse occurred, took this high. So paying attention to how the market trades into that. When market opens Monday, Tuesday, And but my main focus will be Tuesday and Wednesday to see how it reacts there, and we'll see a confirmation to go bullish to target this high. All right, this high and this high, and yeah, we'll be looking forward to see how it's gonna trade and be drawn to this area of inefficiency. And if we also pay attention, we are also dealing in previous years high and low. So we have taken liquidity from previous years low. So you could actually tell that market wants to retrace back into the equilibrium of the previous year and also into the premium of the previous year's trading. All right, and that favorable gap we have there is the premium of the what's it called, last year trading. So also the 3 month time frame, we are actually seeing that we are filling up this area of inefficiency, this engulfed bearish candle. We are filling up the inefficiency right there, and the lower time frame would show us if you want to go, if it want to go bearish from that inefficiency, but it's not showing us that. It's still showing us that market wants to is printing a bullish structure on our higher time frame, after we see that this accumulation phase is occurring below a pool of liquidity right here that we have in the year 2023. All right, so yeah, I'm looking forward right here for a reaction from there to go bullish. So I don't know, this is just the only area I'll look at, because every other area has been filled up. Right, we have this fairly gap that was already balanced, right, and then price moved higher, came back, filled up the inefficiency right here, and then be drawn to that high. So this will be my point of interest for a reaction to go bullish and target this high from May and trade into the premium pricing of last year daily range of last year trading. Then NASDAQ, I already talked about NASDAQ. I was paying attention to it's trading lower and take this liquidity, right? So once that sell stop is taken, our eyes will now go to what is responsible to take that liquidity, and that's what we have resting right here. So once that liquidity is being taken out right here, then we're like, all right, we're looking forward to what is responsible to take that liquidity. Then we look for short right there after a confirmation, then we go bearish. So the confirmation is to break a bullish structure that was trading into that supply zone, right? So once that happens, we take a short, and then we're looking for it to fill up inefficiency, and then we see if we want to continue going higher. But my main interest also if it's going to return back to this opening price, because that is where we have the inefficiency formed. And now we can now go into EURUSD. This is EURUSD, and the same thing I talked about DXY is similar to what I'm going to talk about the EURUSD. So we have this sell stop being hunted. What is responsible to hunt that sell stop? We're looking for an area of order block or supply zone, which is this resting right here. So most traders will be looking at this week, so it's most likely going to trade to that week, but I'm marking everything starting from this bullish candle up to the high of that bearish candle. So if we now go down to the daily time frame, this is it we find on the daily time frame, and this is it right here. So it's like saying we have this hunt right here, right? Price trades into inefficiency from the bar side. Now the bar side is not a valid area to have an entry because it did not break a structure, right? It traded into an area of order block, which is this massive bullish candle we have here. Price trades into it, and it also trades into a premium of a daily range. All right, we have this daily range high, this daily range low. This is our external high, external. This is the main structure that we are having, not all of this internal one. So this internal one is formed in order to be drawn to liquidity, that is the external highs and lows. So we have our swings formed. This is January, has the high of this year, right? So I can actually see that market is showing a sign that it doesn't want to return to the first quarter. It doesn't want to return to the high formed in January, right? So that could maintain the high of this year. All right, so we had our swing high, swing low, and then we traded high onto the premium. We have the swing high formed again, and once that form, we're looking for confirmation to go short. and that is when we have this violation right here. This did not break a structure, so we are not confident to buy from here. All right, so these are all internal structured. So price trades into this low. What is responsible to take this low? We have this fair value gap right here, because if you pay attention to how price traded, we can actually see every area of inefficiency was filled up. This was the only area where we have inefficiency that is not yet filled up. So price returned into it, equilibrium, and then sold off. As it sold off, it also showed us confirmation by taking out an external low. What's responsible to take out an external low? We have this inefficiency from here, and in line with that inefficiency, we have this bearish order block or a supply zone. Price trades into it and then breaks the structure, and then violate what? An external low. So we are now having swing high and swing low. These are now a range we're dealing with. Now, what is responsible to take this low? We have this supply zone, this order block right here. I choose this two bullish candle has the order block, and then we'll also pay attention to the fair value gap right here. Okay, so this week we'll see how price we trade, or next month, or the last week of this month. All right, we're paying attention to price trying to go into that fair value gap. So we're looking for a reaction in that fair value gap to confirm a short, and then we'll take that short to target this low, as price did not show a bullish confirmation entry. Right, we take that short, and then we'll target this low, and we'll see how it's going to deliver down to this low, because that is the major low that we have. And then in the weekly time frame, we have that fair value gap right there, right here, this, and mistake. Oh my god, yeah, these two things. So we're looking, but we'll just be targeting this low, all right, because that is the most recent low. So once we take that shot, I'm targeting this low and this low. That is my own view on EURUSD and the dollar index. So let's go down to the 4-hour time frame. So this is the 4-hour time frame, right? We took this low. Is it possible that a short-term accumulation phase wanted to occur right here? Because I can actually see what it did right here. It traded higher to take this external high. We actually did a hunt, and that is previous week high, right? So what is responsible to take that high, including this high? We have this area's demand, right? So I'm not paying attention to that, but I'm looking forward to see how it returns back to this fair value gap, and then sell from there, because that is where we have our breaker structure. All right, so it's very important that you pay attention to your higher time frame, and then use that and have an alignment with your lower time frame to look for your trade entry or execution. Last week was very manipulative, as you can actually see that it's a ranging market, right? So I guess that is all I have for today, and we're waiting for the market to open, and we'll see how this week is going to deliver for us. All right, so my eyes is on this fair value gap right here, so I'll be paying attention from Tuesday and Wednesday to look for a trade entry. Monday is no trade for me, as I will be expecting Monday to show us a directional bias, if it's going to end up as a range or it's going to end up bullish or bearish for this week. Yeah, so eyes on this. Okay guys, so yeah, see you guys next week. I wish you a profitable week. Take care and be safe.